This is East Asia Tonight.
Good evening, I'm Otelli Edwards. Tonight's top stories from East Asia. Li Qiang champions China's economic strength and openness at the Summer Davos conference. The Chinese premier also warning that AI regulation must accelerate before it slips out of control. Meanwhile, South Korea's prime minister used a special address at that forum in Dalian to discuss the country's growing importance in the world of AI and ways to share the economic spoils with society. From Dalian to Beijing, Bangladesh's prime minister begins a 3-day China visit with investment deals and closer economic ties on the agenda when he meets President Xi Jinping. And Europe is moving closer to Washington in the race for AI dominance. Several countries are joining a US-led effort aimed at reducing reliance on China for critical AI supply chains. And South Korea has taken a North Korean soldier into custody after he crossed the heavily fortified border this week in what authorities say appears to be a defection. "76 years after the Korean War began, the fighting may have stopped, but peace remains elusive. The story of one man who spent 53 years trapped in North Korea and another who refused to leave the South for decades." Chinese Premier Li Qiang defends his country's rise in frontier technologies from AI to electric vehicles, rejecting accusations that its advancement was due to state subsidies. Now, Mr. Li was speaking at the World Economic Forum in Dalian. He says that China will continue to participate in global discussions on the governance of AI, warning that the world risks losing control of the technology if governments are too slow to regulate. Well, CNA's senior China editor, Li Qiang, and correspondent Han Se-hui joining us live now from Dalian. Now, ladies, all eyes on the Chinese premier and his message. Walk us through more of the key takeaways.
I'll tell you, China's economic trajectory has been in key focus today. He spoke about the Premier's speech. He was speaking at the opening plenary earlier this morning. And I can tell you there was lots of attention and anticipation with long lines from participants and the media forming hours before that session even began. And as he went into his speech, Premier Li clearly on a charm offensive, very clear that he was speaking to a room full of global leaders and businesses that have come in from around the world.
Indeed, there was a charm offensive because of the overall message in Chinese Premier Li Qiang's speech was to reassure investors that China remains open. But what was interesting and I think surprising for many participants and delegates was that he had pushed against the Western narrative called China Shock 2.0. So it is seen as China being a threat to the rest of the world. And so he pushed back against that narrative. He argued for a new narrative called China Opportunities 2.0 to drive global growth. And I put together this story. Take a listen. It was an address peppered with veiled swipes at Western economies. In his nearly hour-long speech, Premier Li Qiang repeatedly stressed that innovation would be the driving force behind China's long-term economic growth. He called for greater investment in research and development in strategic technologies, saying that focus has helped fuel the rise of industries such as new energy sectors. But Mr. Li also pushed back against a common criticism.
这才是中国产品竞争力的关键，而不是现在也有个别人所说的，中国的产品有竞争力，主要是中国政府靠补贴，不是这样。中国政府还没有这么富有，我们也补不起，主要是靠我们的。 中国的大规模市场，去把我们的新产品用起来，让新产品火起来。
This comes as the European Union has pushed ahead with anti-subsidy investigations and tariffs on Chinese electric vehicles, amid concerns that state support gives Chinese firms an unfair advantage, which the EU says has contributed to trade imbalances and global overcapacity. Mr. Li also addressed what he described as perceptions of China as a threat to the wider world.
也有一些人并不那么看，他们对中国的科技和产业创新感到有些焦虑，甚至也有人借机抛出了一些不好的、不友好、不实事求是的一些论调，比如最近个别媒体在报道的所谓的“中国冲击 2.0”， 中国冲击 2.0， 认为中国的发展是对世界经济的冲击。
Mr. Li said those opportunities include strong investment returns, adding that leading Chinese companies can deliver significantly higher gains for global investors, driven by ongoing innovation. He sought to project an image of stability and confidence, reaffirming China's commitment to openness despite heightened geopolitical uncertainty.
我们有信心、有能力把这个良好开局保持好、发展好。 不断地书写出中国高质量发展新的篇章。
There are signs of economic resilience. Mr. Li saying the economy got off to a strong start this year, growing around 5% in the first quarter, with what he described as solid momentum continuing into the second quarter. Tan Sihui, CNN, Dalian. But Olivia, you were in that room as well when Chinese Premier Li Qiang made that speech. There were some topics and themes that he didn't elaborate much on.
Right.
Some analysts and businesses said they hope to hear more policy signals on the domestic economy, especially since China is currently experiencing weak domestic consumption as well as a prolonged property slump. But typically on such international stage, Chinese officials would focus more on bright spots.
Yeah, that's right. And I have to point out that the speech did generate a lot of discussion, buzz, you know, following the sessions, several people raising what they thought were some of the key points. But you mentioned some of the challenges that were not fully addressed. One of those that we are looking out for is China's shifting demographic. And I give you this statistic here. China's population age 65 and above is expected to grow by almost 70% by 2040. And if we were to think about the manpower and the labor that China has had with the sheer size of its population, which has contributed to its economic rise, there are lots of questions as to what happens next. And I moderated a panel about aging, and there was this part of the conversation that we'd like you to see. When it comes to China's case, is it a challenge or is it an opportunity for it to be a laboratory, perhaps, for longevity?
The estimate is that the silver economy is about 10% of the GDP, so that's quite significant. And when we have, for instance, until last year, the official retirement age for men is 60, and for women is 50 or 55. So the gap between the official retirement age to the final days are so long that this will just increase more opportunities for savings, pensions, expenditures, services, communities, and all of that. So that's the plus side. But I'm also very worried about the significant drop, this cliff that we're looking at, the fertility drops in China. At the moment, the mainstream policy in China is to give more subsidies. So to encourage the couples and give them more money, because that would kind of lessen the burdens. But we look into this and we argue that is not really the right policy direction for this. A few years ago, some famous male economists did a study on the fertility cost in China. And they find that if you were to raise a kid in China from age 0 to 18 years old, then on average, that costs $68,000 US to raise a kid. That is very high. And we find that there is actually another very important cost. So in some of the leading countries, there's this concept called motherhood penalty. So it's not direct cost that I'm paying for the baby. I'm not taking it out of my pocket, but it's the opportunity cost if I, the woman, the mother, stayed in Korea. On average, globally, every child is equal to about 20 to 30% of a woman's lifetime income. So we borrow that and do the calculation for China, and we realize that that number is $78,000, which means just the one cost of motherhood penalty is much higher than all the milk powders, the educations, all the housing facilities, and all of that combined, which means if there were only one kind of policy, then the solution should be emphasizing on how to help women to lessen the burden for the health care.
There's a dialogue in the U.S. that people like to talk about that China's declining population is going to spell economic disaster for China. And I've been turning this around on them to say, in an AI world where things are going to become more efficient, isn't this an advantage, not a disadvantage? Because while we're trying to search for jobs for the people that have been losing their jobs, the AI is replacing that sort of trend there. So I actually think that there's a lot of talk, especially in the West, about China's economy and population, and I think it's misplaced in the current world where AI is changing that calculation. And you're seeing that calculation change all over the place. People are just one factor now, a very important factor, the most important factor, but technology is changing the number of people being the only factor. And I think that that's something that's quite new to all of us.
And you can catch the full discussion from that panel session on CNA's YouTube, including a part where there was a little bit of a debate on whether AI and tech could help with some of the challenges faced with aging, because there was a recent report released by the World Economic Forum in which it did say that actually low-tech, low-cost measures from things like exercise, hearing aids, and preventing falls could do more and unlock $6 trillion in healthcare savings by 2040. Wow. And so WEF is arguing in that report the longevity opportunity does not actually come from AI.
And over the next day, tomorrow will be the last day of the summer Davos. We will be putting a story out for you on the energy transition in Asia following all the discussions on AI and energy. I'll also be speaking with Mongolia's Minister for Digital Development, Innovation and Communications.
We'll also be continuing to look at the global economy. I'll be speaking with S&P Global Ratings Chief Economist. Also, to wrap things up with us, we're going to be speaking to the president of the World Economic Forum. So last day, but doesn't mean less busy. We'll have more interesting reports from here in Dalian.
Back to you. Report.
Yeah. Back to you, Telly.
Oh, certainly looking forward to that. For now, thanks so very much for all the highlights from day 2 of the World Economic Forum in China. CNA's Olivia Xiong and Tan Sihui joining us live from Dalian. Now, also at the World Economic Forum, South Korean Prime Minister Kim In-suk laying out bold plans for his country, reiterating its ambition to become one of the top 3 AI powers.
Of all the potential AI capabilities, I believe that we are competitive in terms of physical AI development. Now, when we think about Korea's economic capabilities as they stand right now, I would say that we have been focusing on securing as many GPUs as possible. So we have secured more than 260,000 GPUs so far, which may be more than what we need. And at the same time, we are trying to change the way we supply electricity by shifting to renewables.
Mr. Kim says that South Korea is accelerating its shift to renewable energy to support its AI ambitions. The country is also establishing a global AI hub in Seoul. But Mr. Kim says that the benefits of artificial intelligence must be shared broadly across society.
Future benefits and profits to be generated by AI may also be distributed in the form of some sort of basic income schemes. And so we will continue to do experiments within our society and share the findings and lessons learned with the rest of the world. So in that sense, we want to be a pioneer in going through this AI transformation, because the basic income, this idea is all about fair and equal distribution of economic growth and profits within society.
Well, we're going to go for a short break now, but coming up next on East Asia tonight, South Korea's hopes of joining the ranks of developed markets have been put on hold. Global index provider MSCI keeps the country in its emerging market category. Plus, SoftBank CEO Masayoshi Son dismisses fears of an AI bubble as regional markets grapple with the lingering concerns over AI-related spending and valuations. Hello again, glad you're with us on East Asia tonight. We've got Roland Lim standing by now for the very latest in business. So, Roland, Asian markets apparently back on the mend after yesterday's AI-driven sell-off. Any updates on that front?
Yeah, Asian equities showing tentative signs of stabilization while oil prices continue to fall. But despite the volatility, analysts say the long-term case for Asian chip makers remains intact, as memory is still a critical AI bottleneck. Let's take a look. South Korean stocks bouncing back from yesterday's rout, while the rest of equity markets in the region struggling to recover amid lingering concerns about the AI spending boom. Korea's chip heavyweights rebounding. They bore the brunt of the losses yesterday as investors dumped on some of the biggest beneficiaries of the AI boom. Now, part of that is due to concerns on the sustainability of the AI rally. But investors also sold chip stocks following regulatory signals that the sector's rally may have gotten overheated. This chart shows the volatility in Samsung and SK Hynix shares. That's soared since the start of the year. Now, one reason for the sell-off in South Korea was so sharp, it was because it had to do with a large, heavily traded product tied to SK Hynix. Damian McIntyre from Federated Hermes spoke to us earlier on the Kospi's concentration risk that leaves markets more exposed to sharp moves for a handful of stocks.
The Kospi index is highly concentrated at this point. SK Hynix and Samsung dropping more than 10% yesterday, taking the Kospi index down itself just about 10%. Those two names are roughly 50% of the index, given, daily moves. Maybe they could be a little higher, a little lower. That's a lot of concentration in two names. Here in the United States, we talk about the Magnificent Seven and the concentration risk that they offer to the US markets. And then when you compare it to the Kospi index, it's more than, two names taking up roughly 50% of the index. Now, those names are very important to the global economy. They're very critical to the AI trade as a whole.
South Korea's top memory chip maker is turning to U.S. capital markets to fund its AI ambitions. SK Hynix plans to raise nearly $29.5 billion through a NASDAQ listing of American Depository Receipts, or ADRs. The chipmaker says the fundraising will help expand production of AI-focused semiconductors and broaden its investor base. SK Hynix plans to issue nearly 18 million new shares ahead of its NASDAQ debut on July 10th. The proceeds will go towards a new chip plant in Yongin, an advanced packaging facility in Cheongju, and new manufacturing equipment. The deal could become the biggest ever ADR offering should it complete at the upper end of its indicated price range. SoftBank founder Masayoshi Son says artificial intelligence is only at the beginning of its growth story, brushing off suggestions that the sector is in a bubble. Speaking at the Japanese conglomerate's annual shareholders meeting, Mr. Son said, described the AI as a bubble is, quote, an insult to AI, insisting the technology is still in the early stages and its full potential is yet to be realized. SoftBank shares have benefited from Son's major investment in OpenAI, but the market capitalization of nearly $230 billion is only about half that of its assets. That's a sore point for the SoftBank CEO. Mr. Son, whose investment firm has made a major bet on OpenAI, said AI's capabilities will continue to expand dramatically in the years ahead. The 68-year-old entrepreneur also said he plans to remain at the helm of SoftBank into his 70s, pursuing his vision of so-called artificial superintelligence. Global index provider MSCI says South Korea will remain in the emerging market category, citing the won's limited tradability outside of the country. In its latest review, it also flagged operational burdens and restrictions on trading and off-exchange transactions. MSCI said Korean authorities had made progress in addressing these concerns, but noted that investors said issues have not yet been fully resolved. At the same time, MSCI deferred a decision on a possible downgrade of Indonesia's equity market to frontier status until November. MSCI acknowledged recent reform measures taken by Indonesian authorities, saying it's a step in the right direction, but it added that investors need to see whether they are effective. Several European countries are joining a US-led alliance that seek to wean off dependence on China on its AI supply chains. Now, it's ahead of a packed Silica summit in Washington later this week. The Netherlands signed an agreement to join the alliance overnight, marking a win for the pact, with Under-Secretary of State Jacob Hellberg calling it foundational. The Netherlands is home to chip equipment maker ASML, which produces machines that etch cutting-edge chips. Other parties include the European Union, Germany, and Greece. Now, Mr. Hellberg also said that Argentina, Chile, Costa Rica, Panama, and Kazakhstan will join, expanding the alliance to 24 members. The US-led initiative was launched in December as part of Washington's efforts to reduce dependence on China on rare earths. That's as Beijing wielded export controls on the critical minerals as a political and economic tool. Despite efforts by some countries to reduce reliance on Chinese technology, business ties between the US and Chinese companies continue to evolve. American semiconductor company Qualcomm is in talks to provide chip design services to China's ByteDance. Our sources say the US chipmaker wants to expand beyond smartphones, its biggest revenue source, into artificial intelligence and data centers. It could develop customized chips using technology acquired through last year's purchase of Alpha Wave Semi. If the deal goes ahead, ByteDance could become one of the first customers for Qualcomm's new chip design business. Now, neither companies have commented on a possible deal. Sources say the talks are ongoing but may not result in an agreement. A Chinese e-commerce giant Alibaba has sued the US government for blacklisting it over alleged ties to the Chinese military. It has denied the claims and is seeking to be taken off the blacklist. The US has added firms, including Alibaba, Baidu, and BYD, to a list of, quote, Chinese military companies. But the blacklist does not have much legal repercussion, but does restrict their ability to work with the US military and to receive research funding. Alibaba's lawsuit argues that the move is a violation of constitutional due process and the rights to free speech. It says it had presented detailed evidence showing that it does not support the Chinese military and its products are not built for defense, but the Pentagon did not respond. The US Defense Department has declined to comment on the case. Beijing has retaliated by adding American firms to its own list, including rare earth miners and defense companies. And that'll do it for business. Uchali.
Thanks, Roland. Right, going to go for a short break now, but coming up on East Asia tonight, China says its rise in cutting-edge tech is an opportunity for the world and not a threat. What will it take to calm jitters in the West? We speak with an expert. Plus, Bangladesh's Prime Minister heads to China, eyeing billions of dollars in fresh investment. Our correspondent Crystal Chia is standing by with the details. You're watching East Asia Tonight, and here are the headlines we're following. Bangladesh's Prime Minister begins a 3-day visit to China, reportedly eyeing $6 billion in funding for a whole range of infrastructure and development projects. Also, South Korea bets big on innovation at the World Economic Forum in China. Its Prime Minister outlining plans to remove barriers to growth, harness AI, and ensure the benefits of new tech are shared across society and beyond its borders. Also at that forum, Chinese Premier Li Qiang defends his country's rise in frontier technologies, from AI to EVs, rejecting accusations that its advancement was due to state subsidies. Well, let's delve deeper into that speech by Premier Li, and we've got CNA's senior China editor and senior correspondent Li Qiang joining us once again live from Dalian. Ollie?
Yes, Ateli, a big part of that speech, key themes that we were hearing, innovation, openness, and a call for foreign businesses to invest in China. And to break down what this all means, I'm joined by an expert, Dr. Li Qiang, who is founder and CEO at Usawa Advisory. She was also the former managing director at Economist Group China. Dr. Liu, thank you for joining us.
Thanks for having me.
One of the big headlines coming out of that speech was the Chinese premier pushing back against the characterization of there being a China shock 2.0, instead saying that the world should see it as a China opportunity 2.0. How do you think this will be received internationally?
That was a very powerful message, actually, but I certainly hope that the world would take it positively, although at the same time, I doubt that depending on the country and depending on the sectors, people may perceive it very differently. For instance, right after that, the person sitting next to me, she's from Africa, and her comment was, what a message, what a competent speech, that so much research and thinking went behind that. So that was received very positively. At the same time, I also hear other sort of doubts and like, how would this change going down the road? Will the rise of China really be beneficiary or kind of competitive or threats to the rest of the world? So it really depends, as I said, depending on the country and depending on the sectors.
Like, there were no specific countries mentioned in the speech, veiled criticism perhaps, but I would like to ask you, is there a sense that given what the Chinese premier is saying and what we're seeing between China and Europe, the tensions that are brewing, is that the topmost concern right now for the Chinese leadership and the impact that might have on economic growth?
That's a very good question. So Europe was not singled out in the conversation that Prime Minister Li was having on his speech, but there's so many external challenges that China is facing. A bit earlier, the world was really looking at the rivalry between U.S. and China and how the trade tariffs was going to happen and impact the two countries and for the rest of the world. But then we saw President Trump visited Beijing, and sort of for the time being, we can relax a little bit. But you're absolutely right that Europe and China could be the next potential bomb of that. And if anything, Europe is more about longer-term strategic planning. And the KPIs of the two sides are completely different. In a way, China is more about growth and efficiency, and Europe is more about this is our value we need to protect. And when things don't go well and then the understandings are not good enough, this is where I worry. So to me, and I advise our Chinese companies going overseas, my biggest concern is not the rivalry between U.S. and China for the short term, but rather the very likely upcoming trade war between Europe and China.
That is interesting. If you could help us understand, because you also travel a lot, you speak to businesses too in Europe, US. Help us understand, why is there this difference in opinion? Is it purely a trade issue, an industry issue, or a political issue?
It's a bit of everything. So when you talk to people, for instance, our clients ask us about China, and different clients from different regions ask different things. For instance, American clients would be more interested to ask about what is going to happen with Chinese economy and what about Taiwan, for instance, right? And European clients would be what's happening with Russia. And that is on their concern. And the clients from the Middle East, they would be which tech sectors? So, what about AI? What policies should we watch out for? So it's not a very sort of single world that we live in. And in a way, that's exciting because business find opportunities that fit to themselves, whether it's different industries, it's different countries, but they see that potential opportunity. At the same time, they also see the risk, and geopolitical risk is really one of the largest risks that all the business have to navigate nowadays.
You spoke about a more fragmented world, but another big theme from the Chinese premier was, talking about innovation and the role that it's going to play in China's next phase of economic growth, or that we are already seeing. But given the tensions and challenges and complexities that we are seeing in the global environment, whether it's the Middle East or with trade, is innovation going to be enough to offset these uncertainties?
Yeah, that's a very good question. I would say innovation itself is not important. We also have to look at the whole global geopolitical fragmentations and conflicts and uncertainties. But that said, innovation is key. Without innovation, then we won't have enough growth and support for the business, for the countries to come together and discuss how we can explore possibilities to work together. So that is absolutely critical. And related to that, I would also argue that, some people say China is not very innovative. I would argue against that, because typically when we think about innovation, we think about sort of more the Peter Thiel's kind of 0 to 1, the breakthroughs. China doesn't do it that way. So when you look at the Chinese business, we're seeing different kind of innovation. So instead of 0 to 1, we could have like 1 to 1.1. Think about Ant Financial, right? Alipay borrowed the idea from Payball, but it became of its own empire in that sense. Or China doesn't just do 0 to 1, but China does 0.1. So think about CATL. So it's supplying all the batteries, right? It started from EV cars, and now it's going into cruises and airplanes and all of that. Or China does sort of, I take this one and that one and make them into like 10. So think about WeChat. It's now a combination of Facebook, WhatsApp, Instagram. You can do shared rides and all of that. So it's a very different kind of innovation.
But the question also then is, there's innovation within China, but another part of the equation is the foreign direct investment into China, which we know fell by 9.5% last year. There was a call for firms to invest in China. Is this going to be enough? Do you think we are going to see more enthusiasm?
I think, again, it really depends how the different countries are reviewing this. For countries that feel China is, quote, quote, playing very unfairly, then they would have more hesitations.
What would they like to see happen for them to make the move?
They would want to see more sort of open up of policies and cut down on certain subsidies, or even some countries or sectors are calling for lower down certain prices, or even appreciation of RMB, et cetera, et cetera. But FDI into China is only part of the story. FODI, Chinese outbound investment, is another major trend. Already a few years ago, we saw ODI in China has surpassed FDI into China. So for China to be more integrated with the rest of the world, FDI matters, ODI also matters. And that's why we say, is it a China shock or is it a China opportunity?
You spoke about ODI. I would like to, for our last question, ask you about how China is increasingly positioning itself as a champion of the global south and looking to these developing countries as a market. But realistically, where do you see the opportunities for China and the opportunities for the global south countries to enter China? What could they offer or find in this market?
Yeah. So in the world of physics, we say that the most stable structure is a triangle. So we have US, we have China. What is that third pillar? More and more likely, we're looking at the middle powers or emerging market or global south, however we call it. So the way China is seeing itself, and hopefully, is that is providing an alternative model to the traditional, more European and American way of whether it's institutional or economic growth model, et cetera. So in a way, we can say the world is going through a phase of decoupling. On the other hand, we could say it's a completely different kind of globalization, because when it comes to trade and investment front, China is somewhat decoupling with Europe and US, but at the same time, it's definitely working a lot more closely with the global south, so to say. And it started with trade, with investment. And the next stage would be culture, would be all the value discussion and all of that. So China is at the very early stage of that.
So early stage, more to look out for.
And globalization, a different globalization.
Well, thank you so much, Dr. Liu, for sharing those insights with us. I was speaking with Dr. Liu Qiang, who is founder and CEO at Usawa Advisory. Back to you.
Hey, thanks, Olivia and guest, for that conversation. CNA senior China editor and senior correspondent Olivia Xiong was just speaking to us live from the World Economic Forum meeting in China's Dalian. Now, Bangladesh's Prime Minister is on a 3-day visit to China, part of his first overseas tour since taking office in February. Tarique Rahman is reportedly eyeing nearly $6 billion in Chinese funding for a range of infrastructure and development projects. He will meet Premier Li Qiang tomorrow and President Xi Jinping on Friday. Both sides could sign around a dozen agreements and review 4 major initiatives proposed by Mr. Xi. Military cooperation also on the agenda. Dhaka is looking to finalize plans to purchase 24 Chinese fighter jets. The visit is expected to be closely watched by other regional powers like India. And for more, our correspondent Crystal Chia, she joins us live from Shanghai. Crystal, talk us through what are some of the outcomes we can expect from the Prime Minister's visit?
So Bangladesh media reports say that the country will advance plans to buy Chinese fighter jets. The airframe only price coming in at about $40 million. So if signed, Bangladesh would have better military capabilities. And as for China, it will be the second such deal for its flagship aircraft. But this deal could also raise tensions with India and other countries. So earlier this year, we referenced this purchase where Bangladesh bought jets that were partly developed by China. The US had raised concerns and said that it plans to pitch alternatives. Now, apart from this, there could also be a major solar deal, this coming at a time of global energy disruptions. Now, Bangladesh wants 40% of its power to come from renewables. It is now at 2%. At the same time, China is dominating the global solar sector, making over 80% of its panels. Of course, all these details only coming from the Bangladesh side as we await more lines from China.
Also, Crystal, Bangladesh is a new leader, he's visiting China before going to India. What does that say about the dynamics among Beijing, Dhaka, and New Delhi?
So Bangladesh is a key partner in China's Belt and Road project. China had become its largest foreign investor. For the past 10 years, Chinese investors have committed about $30 billion. They built textile factories, energy hardware factories. And for China, this means access to cheaper land and labor while still having control over its supply chain. Now, politically, there's also a triangular dynamic between China, Bangladesh, and India. In the past year, Bangladesh has been expanding ties with Beijing as relations with India continue to remain strained. But for China, it is expanding cooperation with both countries. Like you mentioned, Foreign Minister Wang Yi met Prime Minister Modi in India earlier this week. He said that they should maintain the momentum of their relationship. Now, turning to this visit, again, a state media editorial, Global Times, they noted India's unease over these expanding ties between China and Bangladesh, but reiterated and emphasized that the meeting is not directed against any third party. Oteli?
Well, thanks very much for those updates on China-Bangladesh relations. CNA correspondent Crystal Chia speaking to us live from Shanghai. All right, we're going to go for another short break now, but coming up next on East Asia tonight, Seoul detains a North Korean soldier who crossed into the south in a possible case of defection. Plus, the Korean War may have stopped 73 years ago, but for some, it never really ended. We meet 2 former prisoners on opposite sides, still searching for closure decades later. North Korean leader Kim Jong-un calling for a major expansion of his naval forces. He says that Pyongyang should build 2 warships every year for the next 5 years. Now, Mr. Kim attended the commissioning ceremony of the 5,000-ton destroyer Chohyun at the western port of Nampo. KCNA News says that the vessel has completed more than a year of testing and has now formally entered service. Pyongyang says that the warship is equipped with anti-aircraft and anti-ship weapons, as well as nuclear-capable ballistic and cruise missiles. South Korean officials and analysts say that the Chohyun was likely built with Russian assistance amid growing military ties between Moscow and Pyongyang. Mr. Kim says another destroyer of the same class named Kangkon will soon be deployed. The vessel was repaired after partially capsizing during a launch ceremony last year. He also unveiled plans for larger 10,000-ton strategic warships. South Korea says that it has taken a North Korean soldier into custody after he crossed their heavily fortified border. The South Korean military says the soldier was detained last night in the central section of the border. According to local media, officials believe the incident may be a defection, and an investigation is underway. Cross-border defections through the demilitarized zone are rare, as the area is densely forested and littered with landmines. Soldiers on both sides monitor the area closely. Most North Koreans who flee the country travel through China and a third country before reaching the south. Seoul's Unification Ministry says that more than 34,000 North Koreans have resettled in the south since the 1953 Korean War armistice. In 2024, 236 North Koreans arrived in South Korea, women making up 88% of them. Now, the Korean War began 76 years ago, and technically it continues to this day. An armistice halted the fighting 3 years after it started, but a peace treaty was never signed. For two prisoners of war, the unresolved conflict has left a lasting mark, as CNA's senior Korea correspondent Lim Yun-suk finds out.
76 years ago, North Korean forces launched a surprise attack across the 38th parallel in the early hours of June 25th. Millions were killed or displaced in the days that followed. Families were torn apart. An armistice, not a peace treaty, brought the fighting to a halt 3 years later on July 27, 1953. But for some who lived through it, the war continued long after that truce. Lee Sonu is one of them. At 95, he lives quietly in South Korea, a place he spent more than half a century trying to return to. At 21, he was serving as a South Korean soldier when Chinese forces captured him in Gangwon province on July 14, 1953, just 13 days before the armistice. He lost 3 fingers in the fighting. Like tens of thousands of other South Korean prisoners, he didn't get repatriated in the post-war exchange. Instead, he was sent to work in North Korea's remote northeast, spending 53 years in coal mines and camps. He married, had 3 daughters, and lived thinking that he might never leave the north. Then in 2006, he fled via China and finally landed at Incheon International Airport.
리선우 씨하고 내 이름 부르면서 사람들이 벌써 53년 동안에 내 나라 내 땅이기 때문에 내가 6.25 전쟁에 그렇게 강한까지 했기 때문에 나를 알아주는구나.
But the reunion he had dreamed of came too late. His parents and 2 of his 3 siblings had already died. His daughters in North Korea refused to follow, fearing punishment if they were caught.
딸이 시집간 거 서 있어. 이제 내가 97인가 몇 살이 됐다는가 생각해봐서 다 이제는 한 60, 70살에 딱 편안하지 않아요. 나는 한나 아파요. 계속 뭐.
Tens of thousands of South Korean soldiers were captured in North Korea. Lee is one of just 80 who have made it to the south. Today, only 5 of them, including Lee, are still alive. 20 minutes away is An Hak-sop, who fought for the other side. Born in Ganghwa near the border, he went to the north to study in Kaesong and embraced communist ideology. Captured by South Korean forces, he spent 42 years in prison, refusing to renounce his beliefs. Released in 1995, he was offered the chance to go to the north when long-term prisoners were repatriated after a landmark inter-Korean summit in 2000. He chose to stay, saying he had no business leaving while U.S. forces were still based in South Korea.
미국 놈을 여기다 놔두고 더더욱 놈을 안방에다 놔두고 안방을 비워준다는 것 자체가 젊은 사람 민족의 양심으로서 허락이 안 되더라고요. 말을 한마디를 하더라도 여기서 해야지 북에 가서 누구들아 합니까? 어디다 대고 하죠? 할 데가 없잖아요.
Now, in his 90s, his sense of that mission has faded. An says he has one final wish, to return to North Korea and die among his comrades. But North Korea has not responded to repeated requests for contact through intermediaries in China and Russia. President Lee Jae-myung says his government will not stand in the way. But with inter-Korean ties frozen, there's little Seoul can do. An is no longer sure he should go at all.
사람에게만 두 가지 생명이 있어요. 한 생물학적 생명, 사회적 생명. 이미 사회적 생명은 다 됐는데 내가 북으로 간다고서는 현실을 도피가 되는 것 같기도 하고 앞으로 여생이 얼마 남지 않았는데 죽을 때까지 동지들 앞에서 보면서 죽는 게 낫지 않겠냐.
At over 90, the man who once refused to leave now cannot decide where he belongs. His hometown is just down the road. North Korea, his political home, lies just across a bridge he cannot cross.
Those two men represent just two of the tens of thousands of Koreans still marked by a war that never officially ended. 76 years on, there's still no peace treaty, and for many, there's still no closure. Im Yan-seok, CNA, Seoul.
And that does it for Wednesday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia. And you can find us on all our socials, including Facebook and YouTube. Now, for our Singapore audience, do stay on for highlights from the FIFA World Cup. See you again tomorrow.